Making the right financial decisions today can lead to life-changing benefits in the future. The choices you make about how you manage, save, invest, and spend your money can impact your long-term wealth and financial security. Unfortunately, many people don't realize how small decisions today can have a lasting impact. Whether you're just starting out or already managing your finances, making smarter financial decisions can help you build a solid foundation for your future. In this video, we're going to dive into the top 5 financial decisions that can change your life long-term and how you can start making these decisions today to set yourself up for success. 1. Start saving and investing early. One of the most powerful financial decisions you can make is to start saving and investing as early as possible. Time is one of the most significant factors in growing wealth. And the earlier you start, the more time your money has to work for you. When you invest early, you take advantage of compound interest, which allows you to earn interest on both the money you initially invest and the interest that has already been earned. This snowball effect can lead to significant growth over time. Even if you can only start with small contributions, getting into the habit of saving and investing early is key. The earlier you start, the less money you need to invest to reach your long-term financial goals. For example, if you start investing $100 a month at age 25 and continue until retirement, you'll have much more than if you wait until you're 35 to start investing the same amount. While it may seem like a small difference at first, the impact over several decades is tremendous. To implement this decision, start small, but start early. You don't need to wait for the perfect moment to begin investing. Begin with what you can afford and increase your contributions as your financial situation improves. Over time, your savings will grow, and the compounded returns will help you build wealth that will secure your financial future. 2. Build an emergency fund. Building an emergency fund is one of the best financial decisions you can make, and it's something that will protect you throughout your life. Unexpected expenses, such as medical bills, car repairs, or even job loss, can happen at any time. Without an emergency fund, these expenses can throw your entire financial situation into chaos, leaving you with debt or a lack of savings. An emergency fund acts as a safety net to protect you from life's uncertainties. The general recommendation is to save enough to cover 3 to 6 months of living expenses. While this can feel like a big goal, starting small is better than not starting at all. Even saving $500 or $1,000 is a good foundation that can help with minor emergencies. Having this cushion ensures you won't have to rely on high-interest credit cards or loans in crisis. Once you've built your emergency fund, you can feel more confident about handling unexpected expenses without having to rely on credit cards or loans. This safety net also gives you the flexibility to make decisions without the stress of potential financial setbacks. It provides peace of mind knowing you're prepared for the unexpected. To start building an emergency fund, prioritize it above other discretionary spending. Set aside a specific percentage of your income each month and treat it as a necessary expense. Automating the savings process can make it easier and ensure you stay on track. Remember, consistency is key, and over time, it will become a strong financial foundation. 3. Pay off high-interest debt. One of the most important financial decisions you can make for your long-term well-being is to pay off high-interest debt. Especially credit card debt with high interest rates can quickly spiral out of control if not managed properly. The interest on high-interest debt can consume a significant portion of your income, leaving you with less money to save, invest, or spend on other necessities. By paying off high-interest debt, you free up more money for saving and investing. When you're paying 20% or more interest on your credit card balances, it's hard to build wealth because a significant chunk of your income is going toward interest payments instead of building your savings or investments. The longer you carry high interest debt, the more difficult it becomes to achieve your financial goals. The best approach is to pay off high interest debt as soon as possible. Start by tackling the highest interest debt first, while continuing to make minimum payments on other debts. Once the high interest debt is paid off, you can shift your focus to paying down lower interest loans, such as student loans or mortgages. Reducing these debts over time will help you free up more money for other financial goals. The key to becoming debt-free is to avoid accumulating new debt while paying off existing balances. If you can Pay off your credit cards in full each month to avoid interest charges altogether. If you have multiple high-interest debts, consider consolidating them into one loan with a lower interest rate, if possible. This will help simplify your debt payments and reduce the overall interest you're paying. Once you're free from high-interest debt, you'll have more money to invest, save, and build your wealth. It will also reduce the stress of carrying debt and allow you to focus on more productive financial decisions. Paying off high-interest debt is one of the most powerful steps toward achieving financial freedom and long-term wealth. 4. Invest in retirement accounts. Another critical financial decision is to start investing in retirement accounts as early as possible. Many people delay saving for retirement because they feel it's far off in the future. But the truth is, the earlier you begin saving, the more you'll benefit from compound interest and the more time you'll have to grow your wealth. Retirement accounts like 401k, S or IRAs, individual retirement accounts, offer tax advantages that make them powerful tools for growing your wealth over time. Contributions to these accounts are either tax-deferred or tax-free, meaning you can invest more of your income for retirement than you would in a regular brokerage account. A 401k is often provided by your employer, and many employers offer a matching contribution, which is essentially free money for your retirement. If your employer offers a 401k match, it's wise to contribute enough to get the full match. If you're self-employed or your employer doesn't offer a 401k, consider opening an IRA, which allows you to contribute to your retirement on a tax-advantaged basis. The goal is to set aside a portion of your income each month, even if it's just a small amount to start. Over time, these contributions will add up, and the growth of your investments will help ensure a comfortable retirement. Investing in retirement accounts is a decision that pays off in the long run, helping you build wealth over time and secure your financial future. 5. Protect your wealth with insurance. The final financial decision that can significantly impact your life in the long term is protecting your wealth with insurance. Life is unpredictable, and unexpected events such as accidents, illness, or property damage can drain your finances if you're not properly insured. Insurance helps protect you from financial hardship by covering large expenses when the unexpected happens. Health insurance, for example, can protect you from overwhelming medical bills. Car insurance can cover repairs and medical expenses if you're involved in an accident. Life insurance can ensure that your family is taken care of financially if something were to happen to you. The key to using insurance effectively is to ensure that you have the right coverage for your needs. Start with health insurance, especially if you have a family or dependents. Then consider adding life, disability, and property insurance to further protect your wealth. Life insurance, in particular, is crucial if you have dependents who rely on your income to maintain their lifestyle. It's also important to review your insurance policies periodically to make sure they still meet your needs. As your life changes, such as getting married, buying a house, or having children, your insurance needs may change as well. By properly insuring yourself and your assets, you protect your wealth and ensure that an unexpected event doesn't undo the financial progress you've made. Insurance is a necessary investment to ensure that you're covered in case of emergency, and it's a smart decision for your long-term financial security. There you have it, the top 5 financial decisions that change your life long-term. From starting to save and invest early to building an emergency fund and protecting your wealth with insurance, these decisions will help set you up for a secure and prosperous financial future. The sooner you make these smart financial moves, the more time your wealth has to grow. If you found this video insightful, don't forget to like, share, and subscribe for more updates on personal finance and wealth building tips. Let me know in the comments which financial decision you plan to prioritize first. I'll see you in the next video.